Nifty. Hi, this is Michael Rony Mullick, and you are watching the pre-market show. Today is the 13th of June, and it's a Monday, and things look very, very bearish in the markets. So, SGX Nifty is indicating a market can open with a gap down of almost 400 points in Nifty. So, things, as I said, it's not a good picture. We were seeing that the US market ended at the lowest point on Friday evening, where the markets ended over there, and as we were expecting the Asian markets to open, and they did open, but they are massively sold off, almost 2.5% down all the Asian indexes, which is indicating SGX Nifty to fall by more than another 200 points. So SGX Nifty at one point of time, if I can show you the charts of SGX Nifty, it was indicating a low of 15,837, which is almost close to 500 point fall from Nifty from yesterday's closing to today's opening. So that is the nature of volatility in the markets and the bearishness in the markets, to be precise. So Nifty is currently trading at 15,888, which is indicating a 300 point fall in the markets. And so if you can calculate from 16,200 is where we ended on Friday in the Indian market, and now it is showing 15,887. So that is close to almost 300 points plus gap down in the markets. So when this happens, there will be absolute mayhem in the markets, because when the index heavyweight falls like this, the main index of a country falls like this, you can expect massive sell-off in all the stocks, and that is exactly what is going to happen today. And so this was expected, and we had this risk going on to trade. On Friday I told you to be exercise caution, because these kind of markets it's event driven, and whenever the inflation rate, if it was higher, it is higher, there will be a massive sell-off. That is exactly what we're experiencing right now. And if it came opposite, if it was lower, then the markets could have shot up drastically. So there was a huge event risk, and hopefully most of you are not carrying your positions overnight. And even if you are carrying short positions, so that is going to be a major relief for you. So let us look at the markets currently, how the Asian markets have opened. We can see that SGX Nifty is sold off, and the main reason is attributed to the Asian markets, which opened with a massive gap down. Starting our analysis with Hang Seng, this is the Hong Kong index. It is down by almost 2.68%. As you can see that the markets opened with a massive gap down, is what we can see. It opened with a gap down of 3%. This is the Hong Kong markets we are talking about. The Japanese market is down by 2.64%, down by 700 points. The Chinese market is not that bad, but still it's 1.2% in the negative. Korean market is the worst performing. It's at 2.75% in the red currently, with no signs of recovery whatsoever. Coming to the global markets, the US futures to be precise. So you can see that this is the chart of S&P 500, and it is down 1.3%. It is trying to recover slightly, so that is good, but it opened with a gap down. It continued to fall, but now it is trying to move up a bit, but that is not at all significant, is what we can see. Coming to Nasdaq, same thing. It was down almost close to 3.6% yesterday. Now it is down by 1.8%. So that is more than 5% down in a matter of just 2 days in the US market. So Nasdaq is down by 1.78%, and Dow Jones is down by close to 1%. These are the futures I'm talking about, so not the spot. The spot had ended deep in the red in US, more than 2.5% down yesterday, and today the futures are trading bad because the Asian markets are down, and Asian markets are down because the US markets are down. So overall, it's a spiral, and it's a downward spiral to be precise, and things look very, very bearish. Coming to the other things in the market, let us look at the dollar index and crude oil prices. The dollar index is at 104.43. So if we look at the daily chart, it will be more clear. So dollar index is clearly shooting up. It is close to its high of 104.9. So if that is breached, we can expect the dollar index to gain more strength, and as we know, this strengthening of dollar index indicates a market crash, because they are oppositely correlated. If one rises, if the dollar index rises, the equity market is supposed to fall. USD INR front, things look again very, very grim over here as well. USD INR is indicating another weakness. It is closing, it's trading at 78.172, and it made a high of 78.19. so Indian rupee is on its way to get to weaken further, and so unless and until the governor, the RBI, does something, the rupee will continue to weaken, and maybe go close to an high of 80 rupees, and that can happen unless the RBI intervenes in the USD INR market, the currency market. So overall, things look bearish. So the dollar is strong, the rupee is becoming weaker. Let's see what happens on the crude oil front. So let me open crude oil. Yes, crude oil, you can see it is close to $119 per barrel, 118.9 to be exact. So it is coming down, but this is a normal, when the market moves, it does not move in a straight line upwards. It goes up and comes down, then makes a higher high, and again goes, and that is exactly what you're seeing in crude oil. So this yellow trend line which I have drawn, the market should break this trend line for it to come down. Otherwise, if the trend line is not broken, if the market continues to touch this trend line and go up, you can see that is indicating an upward trend in crude oil prices, and exactly that is what is happening. So unless and until this trend line is broken, we cannot expect any kind of any kind of bearishness in the dollar prices. So talking about VIX, India VIX, it was close to 19.5. Today we can expect the VIX to shoot up by 5 to 10%. In fact, in US it had shot up to more than 10%, and it closed 6.3% down on a close to close basis, but that is still high because the VIX is at 27.14. In India it is slightly below 20, and today we can expect that the 20 mark will be crossed just at the opening itself. So overall, data wise, everything looks negative. We talked about the OI data. Bank Nifty, people have shorted in the money call options. The Bank Nifty closed at 34,000, almost 34,500, 600 levels in the Bank Nifty futures, but people have shorted that as well, 50,000, 35,500. You can see massive amounts of call being written across the board. People were expecting a massive gap down, and exactly that is what is happening. Nifty, same put call ratios 0.65, more amount of calls being written than puts. Things look very, very bearish in Nifty as well. So people who are carrying huge short positions, they will be getting rewarded today. And so in these kind of days, the first 15 minutes is again important to watch, because whenever the markets open with a huge gap down, people will be already sitting with good amount of profits. It is important to see that if they square up their positions, indicating that the markets can bounce from here. But if that does not happen, the markets can go down even further when these people create more aggressive shorts, making the markets go even down. So that is what is there today. There is again an event risk is also there. Important announcement is going to be there, and what is that? That is the Indian inflation data for the month of May is going to be released at 5:30 p.m. in the evening, which is post-market hours, the effect of which will be felt only on Tuesday, that is tomorrow's market. So talking about expectations, so for the month of April, it came at 7.79%, which was higher than expectation. This time the expectation is lower than that. 7.1 to 7.3 is the expectation. So let us see if the inflation rate comes below that level. If that is there, then it can have a positive local Q. Otherwise, we are seeing globally the markets are sold off because of US high inflation, and if India it happens the same, so it will be a double whammy for the market. The global markets are down, and even the Indian this data is negative inflation data, then it can add to the negative sentiments of the market. So that is again to be keep in mind that at 5:30 p.m. post market hours, obviously that inflation rate will be coming, and that will be facing the market tomorrow. So overall today expect a bearish day, so wait for the first 15 minutes and see what happens, if there's any recovery or not. Talking about the levels in Nifty, it is important to discuss the levels today, because now the major resistance will be at 16,000, since it was acting as a support, and this time it is clearly opening with a gap down. So 16,000 is going to act as a resistance if the market tries to move up. So up, we are on the upside, we are absolutely looking at 16,000 to hold as a very strong resistance on the upside. On the downside, talking about supports, we will see multiple supports being broken, and today you can expect the markets to take a support around 16,750 if the market falls drastically. Otherwise 15,850 can act as a support, and if everything is broken, 15,672 is going to act as the last resort for Nifty. If that is broken, all hell will break loose, and you can expect the markets to simply go down and touch 15,000 maybe on the short term. Talking about upside, we don't see any upside whatsoever. 16,000 is, like I said, 16,000 is going to act as an important resistance area. If that is broken, 16,150 area is going to act as a resistance, and if that is broken, 16,250 is going to act as a strong resistance for the short term. Coming to Bank Nifty, if Nifty is indicating 400 points gap down, Bank Nifty can easily expect 800 to 1000 points gap down, and especially the financial sectors, they always get affected first whenever there is some kind of bad news. So Bank Nifty levels, you can expect the markets to open at 33,500, and that is again a good strong area for Bank Nifty, and if that is broken, 33,000 is going to act as a last resort for Bank Nifty. And if that is broken, or 33,000 is broken on the downside, we can expect market to move towards 32,000, which is again is going to add to a very negative sentiment in the market. Talking on the upside, we will have 34,000 acting as a strong resistance, and if that is broken, 34,800 will be acting as a strong resistance. So the way markets are looking, there is only one side, which is on the downside. So it looks like we are entering into a bear cycle, and traders make money during the bear markets and investors make money during the bull markets. So if you are a trader, you can look for shorting opportunities whenever there is a bounce, intraday bounce. You can look to sell off the market. So it is better to do with options. So if you are in options, you can sell an option, call option, and for hedge you can buy a call option slightly above that, so that in case there is some major reversals, you will be protected on the upside, and if the markets are falling, you can gain from that. So that is called a bear call spread. So maybe you can try to implement that, or whatever it is. If you can look for shorting opportunities intraday, because overnight carrying the short shorting the futures or something, if you're carrying that overnight, that is going to be very risky, because markets are very volatile. So maybe you can look for intraday shorting opportunities, or maybe you can use options to hedge your short positions and create overnight positions, because it is time to get into the bearish mode, time to sell call options or buy put options, but obviously with a hedge, because anything can happen in the markets. So this is what I have for you today, and so let's again meet for the post market show at 11:15 p.m. at night, where we will discuss how the markets have ended today, and obviously the inflation data will be out by then, and we can have a discussion about that as well. So with that, I am ending the pre-market show here. I hope you have a good day. See you at 11:15 for the post market show. Thank you, everyone.